Yeah, can you give me just a few seconds to bust your bubble? All right. Now here is it. Let me bust your bubble right now. The market does not range forever, does not pump forever, does not crash forever. For that reason, there is no strategy that works at all times. Okay, there's no strategy that works at all times. So because you don't control the markets, okay, you do not control the market. So if you agree with me that you don't control the market, you have to put risk management into consideration at all times. That is how to survive. Okay, regardless of your account size, whether your account size is is small, medium, or big account size. That is how to survive it. So let's say a small account, from $100 to like $9,000. Mid size from 10,000 to like 90,000 is mid size. Then big from like 100,000 and above is considered as a big account. All right. So now you have to. It does not really matter what your account size is. You have to put risk management into consideration at all times. This is what we're going to lead us to this. So we're going to be talking about position sizing like this, talk about leverage, talk about capital size and risk per trade. All right, risk per trade. So if you come here like this, let me go back to this chart. If you come here, you're talking about position sizing. I'm not explaining that. You should have an idea of how much you want to use for a position. Now, there is always an argument between, okay, please, Abimbola, what leverage should I use? Okay, what leverage should I focus on? Should I use 2x leverage, 20x leverage, 50x leverage, 75x leverage, 100x leverage? Which one should I use? Personally, because I'm a swing trader, I use low leverage. 5% in worst case scenario, like 10x. Sorry, I said 5x or in worst case scenario, 10x leverage. Alright. Because if I use high leverage, I will not be able to leave my trade to run for a long time. Now, let me show you something real quick. Now, look at this trade here. Okay, look at this trade. This trade was actually ran for weeks. Okay, it ran for weeks before I closed it. Okay, since April, I've been on this trade and it ran through May 2nd before I could close that trade. Alright. I was able to leave it because I only used 5x leverage for it. Okay, in some cases, I could use 10x leverage, but it's very, very rare. Okay, it is rare that I will use like 10x leverage. All right. So now that's just to show you that if you are going to be a swing trader, because your trade can run for a long time, you don't have to use big leverage. All right. That is where the knowledge of position sizing will come into play. Now, how much are you risking per trade? Okay, how much is in your plan, because you plan your trade and you trade the plan. So let me give you an example. Let's say you have an account of $1,000 now right now. Okay, let me just clone this one. Okay, if you have $1,000 account, you could be risking like, let me say, like $25 per trade. Okay, $25 per trade. Okay, per trade like this. That would be okay. Now we can risk $25. That is where the idea of position sizing will come into place and leverage. All right. Now it is possible that Peter and Paul could be risking the same amount but with different leverage. All right, with different leverage, and of course they're going to be having a different stop loss, different take profit, and different liquidation points if at all they're going to be liquidated. All right. Now let's say you're buying Bitcoin. Okay, you want to buy Bitcoin right now. Maybe just an example, please. Maybe your leverage is okay. Let me even go here. Let me go to Google and say price of BTC. Sorry, not to be single of BTC in USD. All right, so look at that. Now, if you come here like this, $25 will give you 0.041 Bitcoin. All right. Now look at this. If you come here, okay, okay, let me even use something like $100 like this. Anyway, let me use 25. Now, if you want to trade a position size of $25 with of $250, you have to use 10x leverage, okay, which is equals to $25 position size. Is that clear to you now? So the $25 that you use is only your collateral that you deposit to make that trade. Okay, you can also refer to it as margin. Okay, what you have on grant that okay, take this, borrow me 250. Is that clear to you now? Exactly. So and at the same time, if you still want to trade like this, okay, if you trade this on this position size, look at this position size right now. You can stick to position size. Okay, it is still possible that uh you have 250 like this. Okay, let me say you want to use 15x. Okay, if you're going to be using 15x, just come here and calculate your leverage. So it will now be like 250 divided by 15. All right, all right. So what you are risking right there is $16. Okay, for the same position size. Let me say $16.7 right here. Okay, let me say 16.7 like this. Then 15x, right? Then you change this to what? So this is going to be like $25. Okay. So still the same position size, but different leverage and different margin. All right. And at the same time, it's possible that you use 20x. Okay. Then this will now be like 12.5 is what you're risking, and you use 20x leverage. Okay. And you can buy $250 worth of that Bitcoin. All right. You can see the same position size, different leverage equals different margin. You see that? That will say per trade. Sorry. Okay, this is trade. Exactly. Okay. Then this is trade. Exactly. Now, look at this. Look at this. This is case number one, isn't it? Sorry. This is case number one. Let me move all of these spaces. All right. Amazing. So let me clone this again. I'm going to clone this guy like this. Now, it is still possible to use $25 all through for your trades if you want it. Look at it, you have $25 here, $25 here per trade. In this case, you're using 5x. Look at this, you're using 5x. Okay, and your position size could still be $25. But in this case, okay, if you type the amounts on the futures calculator, your futures market, if you type this amount will be increased to 82. Okay, 82. If it's increased to H2, you are still going to be able to spend this amount of money or on 5x leverage to buy this amount of Bitcoin. Is that clear to you now? So if you want to make like 2.5x, okay, you are still spending the same amount of money, all right? But this time around, it is 2.5x, for instance. Okay, so you multiply that by what? Let me see. So that 182 times that will okay 165 or 164 rather exactly. So this is the amount of Bitcoin you're able to buy with this. This is 2.5 leverage. Right. Now, what is now changing here? Your margin is constant. Okay, the margin is constant, but the amount of BTC you're buying is different. In this case, it's 0.0001. 4, isn't it? This one is equals to 0.0084. Then here it is equals to 0.0164 BTC. You can see that. So what is changing? This is constant, this is constant, this varies, and this varies. You can see that. So in summary, okay, it depends on your platform where you are trading actually. In summary, okay, let me delete this and this. Summary, you should have a specific amount you want to risk per trade. Okay, in some cases, you can vary it. Okay, if you want, like, but if you're just getting started, don't manipulate it, don't vary it. Stick with a specific amount. When you become experts, okay, you can begin to rank your setup. Like, oh, this is a more quality setup, I'll put more money into this. This is a low quality setup, I'll put less money into this. You get it? So when you now have a specific amount you are risking per trade, then what is the next thing? Okay, always use your stop loss. Okay, always use your stop loss. It makes sense that you get tapped out, okay, than praying against the market. Like, oh God, please, you should move my stop, you should move my entry. I'll close it now. Go to my TP. You don't have to pray. Okay, you don't have to pray. All right. Make sure you use your stop loss. When your stop loss hits, then congratulations. That could have saved you from a bigger loss. Okay, from a bigger loss. All right. And also have a reasonable risk reward ratio. At least if you're getting started, stick with 1:2. All right. If you stick with 1:2 and you're able to win 50% of your trade, you are cool, man. You are cool. Okay, that's going to be a very good profit for you on a monthly basis. All right. So you have to understand this: position sizing, leveraging, and capital size. You will divide your capital, which is what I recommend. Okay, if your capital size is like $1,000, for instance, divided by 40, that will give $25 in it. Okay, $25. So you have to be wrong 40 times. You have to be wrong 40 times, before you get liquidated. Before leak, before you get liquidated. All right, or before liquidation rather. So if you divide this by 25, okay, that makes it $40 per trade. Okay, you have a grace. You have to be wrong 20, like 20, like how many times? 25 times before all your money will be gone. All right. So if you're just getting started, start with 40. Divide your capital by 40. Okay, if you're getting started like a beginner, divide that capital by 40. Whatever the answer gives you is what you should be risking per trade. If you stick to this, it's going to help you, a whole lot. A whole lot. All right. So I believe that these tips on risk management will be useful to you. All right. Uh, practice it. Practice it. If it works for you, come back to this video and please comment. Okay. If you've gained some value from this, please don't forget to subscribe. Turn on the notification bell. Like this video, comment below, and share with your friends. Okay. I'm going to appreciate this a whole lot. A whole lot. So if you are a return subscriber, okay, or you're a member of Crypto Information on WhatsApp, on Telegram, okay, or on the email list, I want to say thank you for being a part of this wonderful community. I appreciate every one of you. Okay, have a great day.